Hi everyone, my name is Jason Choy, Senior Portfolio Manager at InvestNow, and welcome to InvestNow's Meet the Manager series, where we aim to provide investors with a bit more insight into the investment philosophy and approach of the specialist investment managers we have on the platform. I'm joined by Rory, Investor Relationships Manager at PMG Funds, one of the 30 plus specialist investment managers we have on the InvestNow platform. Rory is here to provide us with a bit of an overview on PMG. Rory, thanks for joining us today.
Yeah, thanks, Jason, for having us.
No worries, mate. So, Rory, could you provide us a bit of a background on PMG, how it all started, and what it is exactly that you guys do?
Yeah, for sure, Jason. So PMG Funds, we are a licensed unlisted commercial property fund manager based out of Tauranga, but we have offices as well in Christchurch and Auckland. So, but we're just over a 30-year business now. We're dating back to the early 1990s, and we were one of the first commercial property syndicators in the country at that time. So, look, a big focus for us has always been on creating access to commercial real estate investment opportunities. And we do that for everyday Kiwis. And, you don't necessarily need, millions of dollars of capital to get started, or, that expertise in managing and looking after those assets yourself. Our kind of philosophy is that we can do that kind of on your behalf. So, look, our business has grown pretty steadily over that kind of 30-year period. We came through the GFC largely unscathed, I think, thanks particularly to a no debt kind of philosophy that we had. But post GFC, we did decide to pivot away from commercial property syndication, and there was a few key reasons for that. Namely, the income concentration that you get from only having a single asset, maybe one or two tenants, but also that, that lack of diversification as well. So we've moved, into a funds management model today, and we now look after 9 unlisted commercial property funds, which is roughly around 850 million of assets under management. So we're very proud to look after those assets. We do that on behalf of about 4,500 investors who invest with us both directly and indirectly through the likes of yourselves at InvestNow.
Great stuff, Rory. So, you've hit on quite a few things that aligns very well with what we do here at InvestNow. So obviously that whole democratization of investment class and getting access to, these wider New Zealand commercial properties that will ordinarily cost, kind of 9 figures, right? So the average New Zealander can benefit from that, but also you've now also been able to incorporate that diversification. So each of your funds invest into multiple properties across different sectors, across different regions in the country. Is that correct?
Yeah, correct. I mean, it's quite a simplistic model when you think about it. I mean, we take investment properties, we manage and look after the tenant relationships, and then as investors, you earn a share of that income, the rental income that they provide. And just as if you owned the asset yourself, you also have that potential for capital growth over time. So we revalue the portfolios every year, and that determines the unit or share price as well.
Great stuff. So 30 plus years in business, it's always great to hear about homegrown Kiwi success stories. So Rory, what would you say is the secret to the success and what has set PMG apart from all these other managers to now grow into what is one of the most preeminent commercial property managers in New Zealand?
Yeah, look, I think our focus has always been on making sure we're a relationship business kind of first and foremost. And a lot of that comes back to the way that we're structured. So, we have in-house expertise across asset management, facilities management, the likes of investor relationships in terms of what I do. So I think, whether you're a tenant business or an investor, we're always looking to build that long-term relationship with you and hopefully, help you achieve your goals. And that might be, if you're a tenant, having a world-class, modern workspace to conduct your business from. If you're an investor, obviously that's protecting and hopefully growing your wealth as well. And so, it's a responsibility we take, very seriously. And we talk a lot about, striving to be that kind of property fund manager of choice.
Great stuff. So And it's always great to see that PMG is investing alongside your clients as well, right? So it shows you guys have got skin in the game, but also that you have a very strong conviction into the New Zealand commercial property sector as a long-term investment. So Rory, can we dive into this asset class a bit more? So as Kiwis, property is something that many would already be familiar with and has led to a lot of wealth creation, but probably Kiwis are more familiar on the residential property side. Could you walk us through some of the key characteristics of commercial property as an asset class? How this might differ to something like a residential property or say like a listed property investment?
Yeah, so obviously, commercial real estate, primarily when we are considering commercial assets to look to acquire, we're looking for, and much, I guess, similar to residential, really good location, a high quality asset that doesn't necessarily need too much, in the way of capex spend or costs associated with maintaining that property. And then what we're really looking for is the strength of the tenant covenant. So that's how resilient is this business or tenant going to be through both good times and bad, and then ultimately, we have a lease in place, which is term certain income that we have out into the future. And so for investors, that should give you some comfort that we're able to maintain our distributions going forward. And so, look, there are similarities to the residential market, but I think we know that commercial has stood the test of time long term, and as long term kind of value investors, we think this has a really important place, I guess, in some investors' wider portfolios.
And that long-term nature of this asset class is quite key there, right, Rory? Because in terms of structure of these funds, although they're still structured as tax-efficient PI funds, they are slightly different to your traditional managed funds that you may see on InvestNow. And that there's no kind of daily liquidity or daily pricing, so it's a bit more limited in terms of that liquidity, given the unlisted nature of the asset class, because you're actually holding actual real life tangible assets here that aren't publicly traded. So given this unique structure, Rory, why might an investor want to consider including some unlisted commercial property in their investment portfolio?
Yeah, absolutely. I mean, that's the key distinction, right? Is that property as an asset class is a liquid by nature, and so for sure there are ways to invest in the likes of listed property vehicles that can perform really, really well, but you're also likely to see a lot more volatility. Obviously, market dynamics mean that the share price can move above or below the actual net asset value of the underlying asset. So typically, because an unlisted fund isn't priced daily, you don't see that. So the trade-off is, you have limited liquidity because you're a long-term owner. We do have a secondary market service that helps facilitate people to exit those funds, but it's not as though you can, push sell and get your money back immediately. But the trade-off for investors is that you typically have more stability. And for a lot of investors, particularly as they get to the later stage in life, they don't want to be exposed to markets that are extremely volatile.
Yeah, and that's what really a lot of institutional investors, the likes of your ACCs, Indian super funds, kind of big hedge funds, they would invest a decent portion of their portfolio in these illiquid assets because they know they don't need to buy and sell it on a daily basis. They can get that kind of what we call the illiquidity premium, or the higher returns generally for locking in your money for longer. So Rory, could you kind of walk us through what some of those investment options you do that PMG does offer? I know you guys previously had some on InvestNow as well.
Yeah, for sure. So obviously, as you pointed out, being unlisted, we don't always have offers on the InvestNow platform. But in the past, we have had offers across two of our funds. The first being the Pacific Property Fund, which is it's kind of our flagship fund, really. It's one of the larger unlisted commercial property funds now at about 400 million of assets under management. That has a strong weighting towards the industrial sector, with a little bit of diversification into office and large format retail. So in addition to that, we have had our PMG Generation Fund also listed on the platform. This is probably one of the lowest access points to commercial real estate in New Zealand. Investors can get started for roughly around $1,000 at the moment. And that fund has really resonated, particularly with some of our younger investors, as they have the ability to also reinvest their returns. Now, if you are going to be working or you have a long kind of time frame until your retirement, it makes absolute sense to compound those returns as opposed to having them paid out in income.
Great stuff. So in terms of performance then, how have these kind of funds stacked up over the years? I know shorter term, the wider property sector and a lot of the markets have actually been very choppy due to interest rate sensitive nature of the asset class, but longer term, this could present quite a good opportunity, Rory?
Yeah, absolutely. I mean, as a fund manager, we're just ticking up over that 10-year kind of time frame from when we launched our first fund. Obviously, prior to that, we were in the syndication business. But I think look, we're kind of, if you've ever invested in property, I think you understand that there's a strong correlation between asset values and the interest rate environment, and that's obviously due to the ability to utilize leverage or debt to purchase those assets. And the last couple of years have been very, very challenging for the sector. We've obviously had an inflation problem in this country, and so the rapid rises in interest rates have meant that property values have come back. Now, commercial, we're not immune. It's very similar to what's been happening in the residential market. But I think what I would point out is that we're starting to see inflation come down. Most NZ economists are picking to maybe see some rate cuts later this year and into next. And so our view is that we're either very close to or at the bottom of that property kind of market cycle now. And history tells us that now is the best time to start deploying capital into those assets that have come back in value. And so, look, the message, I guess, to investors as well is that you can take advantage of this opportunity as well now, whether it's dollar cost averaging into our funds that you've previously invested in to lower your cost base, or making your first investment. Certainly now is quite an opportune time to do so.
Rory, really appreciate all the insights you've been able to provide today on PMG and commercial property more broadly. It's great to hear about all the opportunities you guys provide to Kiwis. And if anyone wants to learn more about PMG, please check out their website at pmgfunds.co.nz or check out the PMG landing page on InvestNow. Rory, thanks again for your time, and we'll see you guys next time.
Thanks, Jason.